Our portfolio is roughly 70% by net book value in single-aisle aircraft and 30% in wide bodies. So today's order was to replenish part of the single-aisle part of the book. We placed orders for 75 A320s last year and the year before. All of the CO component of that is already placed, and we feel there's more demand for A320 and 321 COs, and that's why I placed the order today. It's always been our strategy to have a young fleet. We've maintained a fleet ever since we started of less than 4 years old. And so active trading of the portfolio is very, very important to us. And we will trade down more of our aircraft as they become older to smaller lessors in the market, tax-based lessors. And so that's something we intend to proactively do. We will continue to add wide bodies to the portfolio. In the recent past, we've tended to do that by way of back-to-back transactions. We've added 777s, we've added A330s, and I can see that we will continue to do that going forwards. We think the A330neo has a place in the marketplace. We like the fact that it's got a single engine type. We think that's very important for its remarketability. And we're glad that Airbus have launched it now because we believe there's a short window that they need to launch it in. We finance ourselves broadly in 3 ways. The traditional method has been by using bank finance, and that will still be close to 40% of our financing. We're increasingly now using bonds, and we've just issued Australian dollar bonds earlier this week that will swap into US dollars to finance some more. And then finally, we will use export credit financing. If you look at the marketplace, there is a lot of US dollar liquidity out of there. And obviously a lot of that stems back to the actions of the US Federal Reserve. This means a lot of newcomers to the market and traditional players have capacity, which basically means we're seeing prices being bid upwards. And so for that reason, what we are doing in our portfolio is skewing more of our portfolio towards direct placement of manufacturer orders during this period. I'm not a big believer in consolidation in the leasing industry. What we will see is 2 trends going on at the same time. Firstly, you may see some consolidation of players who have been in the market for 10 years plus, but at the same time we're still seeing new money come into the market, and that new money will come in 2 forms. One is in the form of new leasing companies, and secondly is in the form of existing leasing companies raising new capital or having new owners. We're absolutely a global leasing company. You have to be global because from time to time there will be regional issues you need to deal with in the leasing market. And so we want to keep a globally spread portfolio, and that's what we're doing at the moment.